RH. This is a stock that was down huge today. It was down about 8.7%, and I decided, well, this is a time, okay? We're going to get started here, okay? And so I went ahead and today I bought over $10,000 worth of RH stock to kind of start my position out here. It's roughly about a $5 billion market cap company. Low P, low forward P. Don't put too much weight into that because obviously that business is going through a really tough time right now. And if anything, I would expect them to be less profitable over the next year than they've been over the past year. That's my personal opinion on that. It could be different, but I'm expecting weakness to continue in this business, at least in the short term here, which is why I'm just finally starting a position. Now, the reason the stock was down big here today and why I could buy, shares for much cheaper than if I had bought yesterday, right, is because Big Buffett, okay, Mr. Warren Buffett, they did decide to sell RH stock, okay? Now, it's interesting, somebody on actually Seeking Alpha went ahead and kind of drew up like where Buffett was buying at in the past. And once again, we don't know if this was Warren Buffett buying. It was Berkshire Hathaway, but it could have been Todd or Ted buying the stock. But it's interesting because it looks like they were buying a lot of shares. Obviously prior to Rona, they were loading up on some shares, and then they bought a lot of shares during Rona at very elevated prices, right? 24,000 shares there, 24,000 shares there. And I mean, at these prices, you're talking about $400, $500, $600, $700 a share nearly, right? 36,000 shares there, 25,000 shares, 353,000 shares added right there, right? Then they added another 190,000 shares last year, and then they just sold in mass, right? Which is very intriguing. And so we don't know if that was Buffett. RH, super high-end furniture company, right? I mean, Buffett, we know he doesn't care about any of that stuff, right? It's almost like if Warren Buffett bought Louis Vuitton, like LVMH. It's like, it's not really his cup of tea. So I was surprised. It's a furniture company, but at the end of the day, it's not really like a Warren Buffett type stock. So nonetheless, I put absolutely no weight in whatever decision Buffett made. If he had anything to do with this, it could have just been a short-term trade for Todd and Ted, and they're realizing, RH is going to be in a tough spot for the next, year or so, and they just don't want to be in it, and they're going to move their money elsewhere, right? Why is RH in the tough spot in the short term? Luxury home sales are awful. They're among the worst we've ever seen, to be quite frank. Luxury home sales basically sink record 45% on a year-over-year basis. Luxury home sales have plummeted. Absolutely plummeted to levels that are honestly lower than even the great financial crisis. You can look back in these time periods in the past, right? And so it's awful for luxury home sales. And I believe luxury home sales will bottom this year, and then they'll start to recover, in my opinion, in 2024 and as we move into future years, right? But luxury home sales are just in a horrible, horrible place in the short term. But let's be honest, okay? When luxury home sales recover, whether that's in 2024 or 2025, depending upon which year you think recovery will start in, okay? Do you think RH stock is still going to be $200? Then of course not, okay? People play these things out in the future. And so I believe there's going to be a comeback of luxury home real estate. And honestly, do think about it in this context, right? This matters, right? Luxury homes, okay? The type of people that are buying luxury homes, those people have the sort of money to spend at RH, regardless of if the economy is stronger, weaker, or anything in between, right? And so I think the best thing that could happen is actually a weaker economy, believe it or not, because what that will do is that will cause, obviously, the Fed to cut rates. Rates will cut substantially, and you'll actually see a massive pickup in the housing market, even in a recessionary scenario, which is very different than many other scenarios. And the bottom line for RH, they just need people moving. Like, the worst thing for RH is everybody just sitting in their current home, in their luxury home, and not deciding I want a different luxury home. Because when people decide to move, the chances they're going to purchase new furniture go up exponentially versus their current home, right? And that's just very common practice. Like even out of the luxury home market, somebody buys a middle class home. And what a lot of people do, hey, I don't want to move my old couch in there. That thing's ratted out. I want something nice, okay? And so they go to a furniture store and buy a new $1,000 couch. The same thing happens in the luxury market, just to much, much higher extent, right? And so I think that's something that's going to play out here over this next couple years. Now, where does an RH rank in terms of my most important stocks I would even be buying, okay? I can tell you there's two stocks I have definitely ahead of RH right now in terms of importance of buying, okay? One is Amazon, the other is Palantir, okay? There's a few other stocks that are kind of in, Amazon's just like, that's my number one focus of a stock I'm buying this year. It's been my number one focus. I've been buying this stock for 6+ months now, and I'm just relentlessly buying. Every single week, pretty much, I'm buying Amazon stock. And that's not likely going to stop this entire year. I'm going to pretty much buy Amazon stock almost every single week, okay? Palantir, I'm not buying every single week, but I'm buying a lot of Palantir shares, and I need to position as much into this as possible before S&P 500 inclusion. And so those are kind of my two main focuses. After that, PayPal, brand new position for me in the public account. Obviously, I was in PayPal for a bit, then I sold out, quite a while back and took a smaller loss. Thank goodness I decided to do that. And then now I'm back in PayPal. I just got it back in PayPal very recently here. So that is a position I could definitely build into. Cheesecake Factory, definitely want to build into that one some more here. But I would put RH kind of in that realm, not as important as Amazon, not as important as Palantir, but it's kind of in that next tier down, okay? And so that's where I'm at with that one. And I love the long-term vision there. I'm willing to be patient. If this stock doesn't move for the next year because the luxury market continues to be weak, I'm perfectly fine with that. I don't need to make money over the next 12 months. I do want to make money in this one over the next 5 years. And that's where I'm at with this one. In terms of luxury home market, I don't see it getting much worse than 2023. 2023 is about as bad as it gets in terms of what's been happening in luxury real estate, okay? And so for RH, it's pretty much only up in future years, 2024, 2025, and beyond, in regards to their business, okay? Now, I think there's an interesting opportunity out there for even a stock like Rocket. Not a stock I personally own, but, this is a stock that, in my opinion, is already bottomed, okay? It's been kind of bottoming out $6 to $8 range. And for a company like Rocket, it's only going to get better for them, because I can tell you, in terms of mortgage demand, it's been so awful. It will get back to healthier places as this next few years tick on. And in terms of refinance, that business has been at pretty much zero, almost zero, for, I would say 18 to 24 months now at this point in time. Once rates start dropping again, you're going to have a massive influx of people refinancing who obviously have gotten mortgages in the past 18 months at, let's call it, higher mortgage rates. And so a company like that, this is their bottom stage in 2023, and they actually see a pickup, in my opinion, in 2024 and beyond. No, people will probably start to position in this stock. I think they're already starting to position, but they'll probably continue to position in the stock over this next 6 months to get ready for 2024. That's my opinion in regards to that. They don't even need the housing market to go up. For a company like Rocket, they could have the housing market actually go down and actually thrive in a much better place. And a recession would actually help them out immensely, because then the Fed's got to drop rates. It would obviously pick up refinancing activity in a major, major way, and moving activity in general, right? The one stock's in relation to home build or housing right now that I don't trust, it's the home builders. These stocks, many of them are trading at, near 52-week highs, some of them near all-time highs. I don't trust any of these home builders, okay? Not that I expect them to crash. That's why I'm not playing put options on any of these home builders. Maybe there's a day when I do that. But I have no interest in playing put options. I just think the upside's very limited in these home builders. And I think there is downside risk in regards to these home builders, especially as more homes hit the market over this next year. I think there's going to be less and less need for new builds out there. And so my personal opinion is I don't trust any of them. Their backlogs have been plummeting in a major way. I don't trust any of those home builders, okay? I just think there's very limited upside and there's potential big downside there. And so, yeah, that's my opinion on that.